Our guest speaker today is Chan Hanchin, Maybank's portfolio strategist. Just this week, Hanchin and the portfolio strategy team published a report on Malaysia titled Malaysia Positioning for Alpha. Today, we want to get behind the data why Hanchin thinks Malaysia's equity market may have found a bottom and how investors may benefit from his key findings.
With the drop in equities market this year, MSCI Malaysia is currently trading at 13.4 times forward PE at its 5-year historical low. Many sectors are trading at their 5-year historical lows, where even the tech sector, which has been expensive in the past, is also trading at attractive valuations. Valuations in the Malaysian market is depressed, we think could be due to a number of reasons: political uncertainty, the negative earnings impact from Cukai Makmur, and also global worries about inflation. We think that markets may have overpriced the negative news, and there are a couple of catalysts that could support the market from here. Firstly, MSCI Malaysia's EPS is expected to grow by 11.6% next year. Second, general election will have to be held by September next year, and early election could be a re-rating catalyst for the local equity markets. Last but not least, globally, inflation expectation has slowed down in the US, and this could be a relief for the global equity markets.
Okay. Now, when we look at the ebbs and flow of the stock market, a lot of investment flows this year have been targeted at value-styled equities, as opposed to the once high-flying tech sector. Cyclicals like energy, financials pretty much benefited from the value trade because economies were opening up from COVID lockdowns and valuation was very cheap. You think this style is losing its appeal with investors, and that the next rotation trade will be driven by quality stocks? What's your definition for quality and how can investors position for this?
We think that the technology sector is very attractive. Valuation has fallen from very high levels a year ago and is now trading very attractively. Other than that, if we look at active funds flow, we estimated that active fund managers have reduced their overweight positions substantially in the tech sector. Tech sector consists of many high quality stocks with high ROE and low debt to equity. If you look at our quality model portfolio, more than 50% of the stocks are in the technology sector. In terms of stock pick, we like Inari and Franken for basically the same reason. Both of them have seen big reduction in terms of overweight positions held by fund managers. More importantly, they score very well in terms of our quality scoring, and they are rated by MIPG research team.
Okay. Let's talk a little bit about GE15, which your report pays a lot of attention to. Now, following BN's win in Johor and Malacca, the key faction led by UMNO, which is also BN's largest constituent party, has been pushing for an early election. What is the ideal window for the Prime Minister to dissolve Parliament, should he opt to carry out an early election this year?
For the Prime Minister to dissolve the Parliament, he will have to wait until the MOU between the current government and the opposition party to end at 31st of July. Once that is over, then from 1st of August until late September, he could dissolve Parliament, and then the early election could be held somewhere in between mid-September till late November, right before the monsoon season starts in December.
Finally, the setup of the last three elections in 2018, 2013 and 2008 is rather different, which led to a wide range of performance for different sectors for the stock market. How can history serve as a guide to help investors position for GE15 in your view?
I think investors can refer to the historical performance, basically the 3-month performance leading up to each of the general election in the past. So in GE14, consumer staples was the biggest gainers. A lot of them dominate the top list of gainers, because they benefited from cash handout from the previous government. And in GE13, Basically, construction and property stocks rallied. GE12 was basically led by consumer staples. That was due to a global financial crisis, so only consumer staples managed to register positive returns. In the past 3 GEs, on average, consumer staples, financials, and healthcare have delivered the strongest returns. We like these sectors because, in particular, consumer staples, they are a potential beneficiary from cash handouts, while financials and healthcare, they tend to deliver resilient returns, even if the election outcome is different.